You've worked hard your entire life. Now imagine getting an extra $2,400 a year added to your pension automatically. CUP, OAs, and guys are all getting a major upgrade in 2025. But here's the catch: if you don't understand how it works, you could miss out on thousands. This isn't just another announcement. This is real money, and it's coming your way. So stay with me, because in the next few minutes, I'll show you how to claim every dollar you deserve. Welcome to Canada State Pension Hub, your trusted source for accurate updates, expert insights, and real-time news on CPP, OAS, and all things related to retirement in Canada. Whether you're already retired or planning ahead, we bring you the information you need to stay informed and financially prepared. Canadian seniors are finally getting the support they've been waiting for. In 2025, the government is rolling out a combined pension increase of up to $2,400 per year. This includes enhancements to the Canada Pension Plan, Old Age Security, and the Guaranteed Income Supplement. For many seniors, this change could provide a major financial boost. But there's one thing you need to know: not everyone will automatically get the full amount. Understanding how each benefit works is key. Let's start with CP, the Canada Pension Plan. CUP is based on your work history and contributions. In 2025, CP payments are increasing under the government's phased enhancement plan. This isn't a one-time bonus, it's a structural change. If you've consistently contributed throughout your career, your CP payment could rise by as much as $800 to $1,000 annually. The amount depends on your average earnings and the number of years you've contributed. Now, let's move to Old Age Security. OAS is available to most seniors age 65 and older, regardless of work history, as long as they meet the residency requirements. In 2025, OAS is getting an inflation adjustment, and seniors age 75 and up will receive an additional increase. For many, this could mean another $500 to $600 per year. Even if you're under 75, you'll still benefit from the indexed adjustment tied to the rising cost of living. Next is the Guaranteed Income Supplement, or GISE. This benefit is targeted specifically at low-income seniors. And the big news is that GISE is getting the most significant increase in 2025. Depending on your situation, the GISE boost could add up to $800 per year to your income. This change will especially help seniors who live alone or those with limited private retirement savings. Combined with CPP and OAS, the total annual increase can reach $2,400 for many eligible Canadians. But there's a catch. None of this is automatic unless you meet the requirements. Here's what you need to do to make sure you get the full benefit. First, make sure you file your taxes every year. GISE is income tested, and your eligibility is based on your previous year's tax return. If you don't file, you could lose the supplement entirely. Even if you think you have no income to report, filing is essential to qualify for OA and GISE. Second, watch your total taxable income. For example, OAS starts to get clawed back once your income crosses a certain threshold around $90,000 a year. If your income goes above that, your OA payments are reduced and at a higher level, eliminated. This is why managing your withdrawals from RSP, REIF, or other investments is so important. Third, use your TFSA wisely. Any money withdrawn from a TFSA doesn't count as taxable income and won't affect your OA or GISE eligibility. If you have savings sitting in an RSP, it might make sense to gradually convert it to a TFSA to avoid tax shocks in retirement. Also, consider income splitting if you're married or have a common law partner. Pension income splitting can lower your overall tax rate and help you both qualify for higher OAs or GISE payments. Finally, make sure your personal information is up to date with Service Canada. Errors or outdated records can delay your payments or reduce your eligibility. Check your CPP and OAS statements regularly to verify your contributions and benefit projections. This $2,400 pension boost is more than just numbers on paper. For many seniors, it means more money for groceries, medication, heating, and daily living expenses. It's real relief at a time when inflation and cost of living pressures are hitting the hardest. And remember, these changes aren't just for those already retired. If you're in your late 50s or early 60s, now is the time to plan. Understand how these programs work. Build a withdrawal strategy that minimizes taxes. And don't wait until you're 71 to make a plan. The opportunity is here, but only if you take the right steps. File your taxes. Review your income. Use TFSA smartly. And take advantage of every federal program designed to support your retirement. Because this is your money, and you deserve every dollar of it. If you found this helpful, hit like, subscribe, and share this video with someone who needs to hear it. And let us know in the comments, how will this boost change your retirement plans?